Hello and welcome back. For those of you who watched my last video and for those of you that have not, my name is Hunter Gibson and I'm here with Stock Talks. Now I'm going to be explaining two of the indicators that I use which help me determine which stocks to buy and sell and what time. Now for those of you that are following my Instagram, this is some of the indicators that I use which have helped me turn $5,000 into a little over $10,000 in less than 3 months. And for those of you who are not following my Instagram, go check it out in the link below. So for the two of the biggest indicators that I believe are the EMA and the SMA, and I use actually TD Ameritrade Thinkorswim platform just because I personally believe that that's the best software for me to find the stocks that I think are the most valuable and helpful to me to grow my account to the size that I want. So if we get into it, the first part is the SMA, which is this green line which I have. It is known as the simple moving average, and it fluctuates based on past prices of stocks. Whereas if you look a little closer, the EMA, which is known as the exponential moving average, fluctuates from the last stock price, so it is a lot closer. Now, if you want to learn how to add these, if you are using TD Ameritrade Thinkorswim platform, you just go up here, you click Edit Studies. Now the two are the simple moving average right here, close, and then you can change this if you go into settings. I have it actually at 180, and you can set it to whatever you want, but that's what I believe helps me the best. And then moving average exponential is close, 7, 0. No, you can do the exact same thing. You can change it. You can make these numbers go higher or lower. The lower the number is, the tighter it is going to be. So if it is at 100 here, it is going to be a lot more loose. And if it is at 1, it is going to be extremely tight. So I keep mine at 7 for the EMA and then 180 for the SMA. Now, if you go onto the side studies, all you have to do is search simple moving average and you click this right here. Now since I already have them, I do not need them, and then you hit apply. You can also change the color. I keep mine blue and green just because none of my other indicators are blue and green. So going back, you can use these for day trading or swing trading. I prefer swing trading so I can do other activities. That is why I do that. So I can pick my trades once or twice a week and then do the rest of my time doing whatever else I want, which is right now currently flipping a house. So if you look, the EMA and the SMA, I am at 180 days trades. This is the best time length that I believe. And if you look, they both are doing kind of roughly the same thing. They will act as a support and a resistance. So if you look, this is the overall S&P 500. Now you notice that the SMA, the simple moving average, acted as a support, and it usually tends to. So when it gets down to it, it usually bumps back up, and same goes. So if you look closely, when things bump down, it will keep going. And then once it broke through, this was because of the coronavirus, it dropped exponentially, and then it went back up, and now it's using it as a support again. And also the exponential moving average, EMA, which is the blue line, is a lot tighter, and this helps it use as a support and as a resistance. So if you look here, I'll highlight it to show you. So you can see that if it drops below, it usually for a few days will go below it and act as a resistance, and then when it pops above the exponential moving average, it will act as a support and continue to uptrend. So how do I pick stocks that I believe that are going to perform and do well? Well, there's two real indicators. I like it to be an upward moving stock. So when I look at the 180-day 4-hour chart, I want the stock to continuously being uptrending. I don't want to invest in something that I have the potential to lose money. That's just my personal experience. So when you look at the 3 stocks that I bought today, which are JNP, which is, or sorry, JNJ, which is Johnson & Johnson, you can see over the 180 days, this has been increasing. And if you look closely right here, that the exponential moving average, the price just went over it. So now instead of it acting as a resistance like it did down here, it is popping above and it's going to be a support. And that's same thing with the SMA, the simple moving average. I usually tend to buy things that are only above the SMA just because that is something that a stock is going to be increasing. So you can see here that Johnson & Johnson has been increasing and above the SMA, so it is going to continue to do so. And I tend to make trend lines, so I'll make one down here where it just hit and then at its previous high. So I'll buy in once it is usually the second ticker symbol over, so right around here, which was the second ticker symbol over the support or the resistance that is now going to be the support. And I'll see, and I can look at the percentage right here. So I'll look at the next highest high, which is around 3%. So usually I'll make maybe around 2.5 to 3% depending on where I buy in for this particular trade, which would probably be around 3%, which 3% isn't bad for a 2-3 day period. That's almost 1% a day. Now, if you look at some of the other stocks that I picked, T-Mobile, TMUS, is doing the exact same thing. It is over the SMA, and it just recently crossed today. If you look over the EMA as well, so the EMA was acting as a resistance, and then it just recently crossed over it, now acting as a support. So I can see this soon to be uptrending, and it is going to be over the EMA and SMA. Second candlestick is when I tend to buy in. And then the third stock that I bought today was PEP, PepsiCo. And if you look here again, that it is above the SMA, and it just hit above the EMA for the second ticker symbol, which would be right here. And it was acting as a support, and now it is crossing over. It is going to act as resistance. So if we make another trend line to where the other high was, that is around 4%. So again, 4% in a 2-3 day period, which is extremely well. And then I'll usually tend to have a stop loss if it goes back over the EMA or the exponential moving average. I will sell out or have a stop loss there so that it will automatically sell out if I'm doing whatever throughout the day. And if you look here, if you go to the 1 minute, the 1 day 1 minute chart, that this is DGAS, which is the inverse ETF of crude oil, which fluctuates 3 times actually what crude oil does. That the SMA and the EMA both work for day trading along with swing trading. If you look here, since 12 to 4 o'clock, which tends to happen both day trading and for looking at the 180 chart, the SMA, it bounces. Usually the ticker symbols bounce, so the price will bounce on the SMA if it's above it or even below it. So like again, this is acting as a support. It bounced 1, 2, 3, 4, 5, 6 times since 12 o'clock. Along with the EMA, it uses as a support and a resistance a lot more. So you can see here it's using it as support, then a resistance, support, resistance, and back and forth. And you can make a decent amount of percent day trading. This is just something I don't like to do. Like right here, you could have made a little over 2% just noticing that it went over the EMA and used it as a support instead of a resistance. Now, what I would strongly suggest is buying it at the second or third candlestick, because you understand that the price is fluctuating above the EMA and that it's going to be using it as a support instead of as a resistance. And you confirm it once you have it at the second candlestick. Now, when buying, whether it is day trading or swing trading, I tend to buy above both the EMA and SMA just because I know that the price is moving up, and that's how I make money. So those are only 2 indicators that I use, both the SMA and the EMA. So thanks for watching. This is my Friday video, and I'll see you on Monday.